So we literally just started earnings seasons with the big banks reporting last week, and we're already starting to see some deals pop out in the market. And I'm not talking about some of these big banks that sold off on Friday. Now this selling pressure could be for many reasons. Maybe investors aren't happy with the outlook of the economy. Maybe investors just think that these stocks have moved up too far too fast, they're profit taking. Maybe there's other factors that I'm not considering here, but regardless, the point remains that when there's opportunity like some of these stocks I'm going to discuss today, I want to pay close attention so I can take advantage of it. Now I believe all 7 of these stocks fit this criteria. They've been selling off recently for the past days, weeks, months, and I think it's worth putting on your personal watch list as well. But just note, I'm not rushing out there to buy any of these stocks ASAP. I'm just watching them. I think the value is starting to show, and they are definitely interesting companies to me. I have done some research on them. I like what I see, so I wanted to share that perspective with you guys today. Now, this is something I do regularly with my VIP members. I go through my watch lists. I share with them what stocks I'm watching, what stocks could be showing some value. So if you like this kind of stuff, you just want to get updates on, what stocks out there you may have missed that are showing value, consider joining our VIP group. Link description down below. Anyway, so we're going to go through the 7 stocks here, and if you want a dedicated video on any of these stocks, more in depth, look at their financials, looking at their future projections, the company in depth, all that kind of fun stuff, let me know in the comments. And also stick around to the end because I will be ranking these stocks from my least favorite to my most favorite in terms of which ones would I personally invest in if I had to here today. Okay, so kicking us off here is SolarEdge, ticker symbol SEDG, and this is a smart energy player that has lost 22% of its value in the last few days. They are a big player in the solar space, as their name implies, and they've been developing and improving their technologies for decades. This company has seen rapid growth in both revenues and income, and yes, this is a profitable business here today. 2020 was a tough year for this company, like many other companies that sell these sort of products, because consumers were kind of penny pinched in some aspects. They didn't really want to spend on items like this, which are more luxury items. And as a result, the company did not see the growth they wanted to see, say, at the beginning of 2020. But guys, despite this, they're still expected to eke out a small growth year over year. But looking at 2021, this is expected to be back on track with 20% growth. This is still a relatively small company with only a $14.5 billion market cap today, so there's tons of room for this to grow massively. Energy is going to be one of the biggest focuses, in my opinion, in this next decade, so you want to keep an eye on this stock. Facebook is the company we have next up here, ticker symbol FB, and we had to bring this in because this is a blue chip giant that quite honestly is on sale today. Sure, there's a lot of regulation risk right now, there's a lot of political risk right now. This is not something new to Facebook. This is something that's been plaguing the stock for years. And I completely understand if this is not your cup of tea and you want to move on from this stock, that's fine. But if you're looking for, pure financials, which are strong, Facebook has it. Fundamentals that are strong, Facebook has it. Outlook that is strong, Facebook has it. It's really hard to ignore this blue chip giant. Facebook has been on a steady sell-off, down 20% since about late summer as we got into election season. And oh man, like I said, this stock has been in the spotlight because of what's going on, and a lot of people are just not happy with it. That being said, Facebook is still a profit machine with massive profits that just keep growing. This company has a stellar balance sheet, and they control their market so strongly that if they raise prices on their advertising ever so slightly, the profits would explode. Next year, Facebook is expected to bring in $100 billion plus in revenue with growth of 24% year over year, which is stunning. These are kind of numbers, growth projections you see from small high growth companies and not from a giant that's nearly $1 trillion. That being said, the company today is at a $700 billion market cap, but based on their fundamentals, their projections, the outlook of this business, this should easily be a $1 trillion company in my opinion. So I think that the regulation risk and all that stuff surrounding this right now is probably going to keep plaguing the stock for a little while. But eventually over time, it's going to be forgotten. Eventually over time, investors are just going to be like, I can't ignore these fundamentals, just like it's happened in prior years. And the stock is going to see some phenomenal growth once again. This is kind of one of those stocks that's like a silent winner. it just keeps trickling up slowly over time, you know. It doesn't really move massively up in a single day and get everyone's attention. It's just like, it's a slow mover, but it has done really well for me over time. Okay, Clover is the next stock up here, and I touched on this recently on the channel, and I really wanted to add this stock to our list here. We are down over 22%, and I think this is an opportunity. Clover, if you're not familiar, is in the healthcare space, and they use AI and technology to improve the experience here while reducing costs. This is a disruptive company in a disruptive industry, and I think that they have a good shot of gaining a good amount of the market. Now, this market really does excite me. If you want to know why, check out that video. I'll leave a link description down below. Because it's a growing industry by a definitive amount that we can actually calculate, and the potential is just massive. Also, not to mention, Chamath is behind this company, and he has a solid track record. This is currently a $5.4 billion market cap company, so don't be surprised if this doubles or triples in no time as the market starts realizing their potential. Now, there isn't a whole lot of analyst data here with this stock because it is a fairly new SPAC merger, but as that comes out, I will be making more videos on this if that's something you guys want to see. It's a company that I think is extremely interesting, and if you want healthcare exposure but still like technology, this is definitely one to consider. Okay, next up is a stock we haven't really talked about on the channel before, to my knowledge, but it's worth putting on your watch list. Fidelity National Information Services, or FIS, is a leading provider of technology solutions for merchants, banks, and capital market firms globally. The stock has seen some sharp selling recently, and we're down over 16% now on the stock. Now, this is not some small company, it's an $80 billion company, so it does have a lot of stability typically behind it, and this selling is not something we usually see. While 2020 was strong for the company, 2021 is expected to slow down quite a bit for them, and that could be a big reason why we're seeing some selling here. But if you're looking for a good potential long-term play in a company that has some good financial exposure, this is definitely worth looking at. Now, if you didn't really like FIS, I got another stock for you here that we haven't talked about that has 20% plus growth expected this year. Paycom, this is a platform that provides comprehensive HR and payroll software, is a stock that has been selling off recently. It's lost nearly 15% of its value in less than a month, which is a rarity for this business. Now, don't let the $400 share price throw you off here for this one. It's still a relatively small business at a $23 billion market cap. This means there's still plenty of room for this company to keep growing. And growth here, guys, is what we're expecting. Over 20% year over year next year, and they're expected to cross that $1 billion revenue milestone as well. This is a stock that I would consider under the radar, and this is a company that I am personally spending some time looking into because I think there could be a good opportunity for this stock, this company, to double or more in the future. There's definitely a market for this. They're definitely providing a service that their customers love, so could be a win-win situation here. Now, because of the space that they're in, companies like Square, maybe even Workday, tend to take up the spotlight here. But you can see this company is doing just fine, and it's profitable as well. So again, worth adding to your watch list. Next up, we have another controversial pick here when it comes to social media. We're talking about Twitter, guys, the main platform, in my opinion, that has been plagued with election issues. This has caused nearly a 20% sell-off here in the last month. Very sharp, very quick. But funny enough, guys, Twitter is expected to see some solid growth next year. So this to me is a huge market overreaction to current events. Simply put, this is probably one of the best buying opportunities in Twitter stock. At a $36 billion market cap, this has room to grow to be a much bigger company over time, and I think they should easily be able to realize this as long as they continue that 20% growth year over year for a few years in a row. If you're not familiar, the same guy that runs Square, that's made this company a massive success, also runs Twitter. So maybe if you missed the boat on Square, this could be another company to bet on the jockey. Okay, so now I'm about to reveal number 7 here. Again, this was in no particular order, but once I get through number 7, we will be ranking these from my least favorite to my most favorites. You want to stick around. Snowflake, this is one of the biggest IPOs of 2020, and this is, I think, appropriate here to close off our list. About 20% discount is currently seen in the stock, and if you consider it fair value from where it was at its highs, this is a good opportunity. Snowflake is sitting at an $82.5 billion valuation, which to me, it's a bit too rich, but I did want to include this here because I know a lot of you guys really like this space. The company should nearly double their revenues this fiscal year and cross that $1 billion revenue mark as well. So it should be a good year for the business itself. But for me to value a company that's $1 billion in revenue at an $82.5 billion market cap, that's rich. It's probably not a company for me, but I know a lot of you guys are believers in stocks like Palantir and Snowflake here, so with a sell-off like this, it definitely should catch your attention. Okay, so now that we've gone through our 7 stocks, let's rank them from my least favorite here to my most favorite. Now, no surprise guys, number 7 is going to be Snowflake, followed by number 6, Fidelity National Information Services. Number 5, probably SolarEdge. Number 4, I think I'll put Paycom in there. Number 3, Twitter. Number 2, Clover Health. And that makes number 1, Facebook. And this makes sense because I've long been the most bullish here on Facebook. And I think with this discount we're seeing, it's a pretty attractive valuation. But that's just half the story. I want to hear how you guys would rank these 7 stocks. Please take a second to comment in the comment section down below and let me know what you think of these 7 stocks and if you'll be watching them over this next week, over these next few months as we go through earnings season. Either way guys, hope this video was valuable to you. Hope these stocks give you some ideas on what to look for here during earnings seasons. But either way, I appreciate you sticking around to the end of the video. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.